Welcome back. Getting some clarity, perhaps, for alcohol producers in the U.S. and Europe today following the news of the EU trade deal. But the group overall moving lower. Brandon Gomez has been tracking the impact on that industry for us. Brandon, what do we know?
Hey, good morning, David. A breath of relief, but no cheers yet. European wine and spirits makers treading carefully, finding themselves left out of the EU trade deal. Now, that 15% tariff on EU imports to the U.S., better than the 30% feared, but no decision regarding a wine and spirits carve-out. EU officials saying an agreement for the sector would be examined in the coming weeks. Now, spirits stocks Pernod Ricard, Remy Cointreau, Diageo, and Campari ticked slightly higher at first, now lower as investor uncertainty starts to settle in. Remy, Campari, and Pernod with the largest revenue exposure to the U.S., and you would think, isn't a deal net positive? Why aren't shares higher? Well, two reasons. First, 15% tariffs are still a big hit. Wine trade group CEEV said the previous 10% blanket tariff on EU imports led to a 12% decline for wine producers. And second, leading winemakers may have to increase prices or eject from the U.S. market overall. The EU exporting $10.5 billion of alcohol to the U.S. in 2024, with $1.2 billion coming back in return. Distilled Spirits Council of the U.S. CEO Chris Swanger saying he remains optimistic the U.S. and EU will return to 0 tariffs. David, also weighing on the sector, beer maker Heineken reporting a earnings beat this morning, but warning of softening demand in the U.S. and EU. A real cocktail for disaster here, David.
Well, yeah, you've been reporting on the overall trends for the business. Apart from tariffs, have not been particularly good for any number of different providers as well. I guess that hasn't changed either, has it?
No, and of course, you obviously have the steel and aluminum tariffs as well weighing in on this, in addition to the tariffs on the products themselves, right? You had President Trump this morning saying, we're going to bring all of that production here domestically. Luckily for the brewers, a lot of that supply chain already is domestic, whether it be beers produced in Canada, made in Canada, same with the U.S. So with beer, it's less of a conversation, but as we're talking about spirits and alcohol, the story is a little bit different here.
Yeah. I was going to say, Brandon, the overall demand backdrop, it would be one thing if they were dealing with these tariffs, if the industry or consumption was up. But we talk over and over about the impact of cannabis, the impact of GLP-1s, maybe something just generational that has people drinking less year on year.
Absolutely. You have the legal drinking age Gen Z consumers who are drinking less, turning to those non-alcoholic options as well. But what you have to really factor in here is that they're really calling for this exemption, right? You have to sort of see that while there is this consumer demand that's been depleting over the years. In 2018, these companies were a lot more, they were better insulated to absorb costs. Maybe they didn't have to pass it on to consumers. Now, it's a different story. There's that weakening consumer demand, and you're going to see prices rise. At least that's what I'm hearing from a lot of the producers that I'm speaking with.
Brandon, appreciate that important element of this deal. We'll see if we get more clarity in the weeks and months to come. That's our Brandon Gomez.